For those of you who don't know, my name is Jason Van Duyn. I'm the owner and founder of AQuest Wealth Strategies. And today we're going to talk about, quite frankly, just what's happened, like kind of what's going on in the market today. We're going to talk about what's happened so far in the market this year. We're going to say kind of why has that happened, and what we think might happen for the rest of the year. So a couple of weeks ago, this picture was a little bit more apropos. The market's been back a little bit since then, but it's been bad. It's been bad in the sense that the stock market's down, the bond market is down, cryptocurrency even, which everyone is so excited about for one time, is down. NTFs, which is something that's kind of new and a little bit crazy, are down. Even gold really hasn't made any money. I mean, the only thing that's really up is energy so far this year. I mean, again, there's a couple other really small categories, but as far as main categories, that's about it. Why has this all happened? And I think the answer is kind of exactly what I've been saying for the last year. So what's the worst thing about these a lot of times is they are recorded and they go on our YouTube channel and on our website and to a couple of other places. And so if you say something that's wrong, it is very trackable, where I think I've been saying a lot of the right stuff for the last few years, which is nice. So what I've been saying for at least a year is it's all about interest rates. If interest rates, defined as the 10-year treasury, get up above about 2.5%, I think it's going to be bad, relatively bad for the economy. Again, 2.5 was kind of the danger zone. Right now, we are at 2.9, and that's down from 3.1. So again, and that's based on the 10-year treasury. A lot of people ask, well, why the 10-year treasury, Jason? Why don't you look at, at something other number? I think that's important. So what happens when the Federal Reserve raises interest rates is they're actually only raising what's called overnight lending rates. So banks actually have to borrow money. If they have a good day lending money out, or people take a bunch of money out, they might not have enough. I mean, even though it's electronic now, but you can think of it, I think, to understand it as in the vault. They don't really have enough money in the vault to meet their reserve requirement. And they have to borrow money either directly from the Federal Reserve or from another bank. And when they do that, they have to pay interest. That interest rate, that 1 day short interest rate, is what the Federal Reserve controls. So quite frankly, it doesn't really affect you and I all that much. What that does indirectly affect, though, is the 10-year treasury. And the 10-year treasury is, I would say confidently, by far the most important interest rate in the world. The 10-year treasury, mortgages are based on that. Student loans, credit cards, business loans, car loans, boat loans. Really, anytime that you borrow money, that interest rate is going to be based on what's going on with something called the 10-year treasury. The 10-year treasury started the year at 1.3%. LPL Research and I kind of thought it would end the year somewhere between 2.2 and 2.5, which is a huge change. I mean, that's almost double from where it started in the year. And it went from 1.3 to 3.1 in 4 months. That was the most it's ever moved. It led to the worst bond market actually in history in the first quarter. So it moved super far, super fast. We'll kind of go into the reason for that in a second. But that's been bad, right? As that happens, you have, bonds going down. You have all the debt that everyone holds in the world is getting more expensive, unless it's a fixed rate like a mortgage or a car loan, something like that. So we're going to start to look at kind of what has caused those interest rates to happen, and as those interest rates are going up, what does that cause in the economy, and then what does that mean for like the end of the year and maybe the next couple of years. So first we'll kind of look at inflation and talk about why it's a problem and what's causing it, and then the impact those higher rates are having.